Hi everyone, I am Dr.P.AISHWARYA, Assistant Professor of Commerce. Today I will talk about banking theory, law and practice. First one, definition of banking. So definition of bank, section 2B of the Banking Companies Act 1949 defines banking as accepting for the purpose of lending or investment of deposits of money received from the public, repayable and withdrawable by check, draft, order or otherwise. Now, banking system. Banking system, ownership, types, kinds, business. Ownership, public sector, private sector, cooperative sector, foreign sector. Ownership of bank. Based on ownership, banks can be classified as public sector bank, private sector bank, cooperative sector bank and foreign bank. Next one, public sector bank. It is fully owned by the government. It is public sector bank. This is because the ownership rests with the government and the liability is ultimate. Next one, private sector bank. It is fully owned by group of shareholders who elect their directors from the managing the bank. Next one, cooperative banks. The principles of service motive, whether the profit motive, which are mainly to help the better section of the society. Next one, foreign bank. The bank belongs to foreign countries having branches in India or foreign banks. Foreign contribute the entire share capital. Types of banks: unit bank, branch bank, group bank, chain bank, correspondent bank. Next, kinds of banks. Kinds of bank: commercial bank, industrial bank, cooperative bank, agricultural development bank, savings bank, exchange bank, central bank. Types of bank. As stated already, types of banks are classified on the basis of structure or organizational setup. It may be a single bank or a group of banks or with various branches. Next one, unit bank. This is a type of bank under which the banking operations are carried by a single branch, which is single office. Operations are confined to a limited area. Merits of unit bank: close contract with customers. As the unit bank confines to a limited number of customers, it has close contact with them. Next one, effective management and control. With a limited board of directors and small management, the bank is able to effectively supervise operations. Next, quick decisions. Quick decisions. The management will not delay in taking decisions as there is a close contact with the administration. Demerits of unit bank. Demerits of unit bank: limited resources as the bank confines to a limited area. The scope of mobilizing more deposit is limited. Remittance of fund. As the bank does not have more branches, sending funds to a remote place will be difficult by the unit bank. Next one, central bank control. With more number of unit banks, it is difficult for central bank to control them effectively. Small scale operations. This is the fixed expenditure of the bank will be more which will into the profit. Next one, branch bank. Branch bank is a system with the group of shareholder and board of director constitutions, the head office. The town, state or country or even throughout the world. Merits of branch bank. Mobilization of deposits. Branches spread over, the bank can mobilize more deposit for urban, semi-urban and rural areas. Next one, capital formation. The mobilization of deposits will provide more capital for big industries. Next one, risk spreading. The loss incurred by a single branch or a group of branches incurring. Loss will continue to survive by a single branch or a group of branches. Incurring loss will continue to survive. Demerits of branch backup. Ineffective remote control. More branches spread throughout the country. The control on branches becomes ineffective and it is difficult to take any instant actions to erring personnel. Delay in decision making. The branch managers do not have adequate power and have to depend on the head office for any major decision and the delays the decision making process. Scope for corrections and fraud. Numerous transactions which are huge and large in size. There is every scope for fraudulent and corruption practices creeping in. Next one, group bank. Group bank is a type of banking in which the holding company controlling the subsidiary company which are doing banking business. Thus, the banking business is controlled by the holding company. In India, we have State Bank of India, which is a very good example for group banking. Next one, chain banking. When different banks are coming under a common control through common shareholders or by the interlocking of directors. Such banks are called chain bank. Example, A.D.M.COLLEGE Bank, Lakshmi Vilas Bank, having their head office located in the some place. They have some common directors by which may have common management policy. Next one is correspondent bank. When two banks of different stature or size are linked by another bank, the bank which is linking them is called a correspondent bank. In India, for many of the foreign banks, such as India Bank act as correspondent bank. Next one, kinds of bank. So kinds of banks, first one is commercial bank, and then industrial or investment bank, cooperative bank, agricultural development bank, savings bank, foreign or exchange bank, central bank. Commercial bank. It is a kind of bank which promote commercial activities by lending for various commercial activities. They cannot afford to give long-term loan and can provide only working capital for business purpose. Next one is industrial or investment bank. When banks provide long-term loans to industries, they are called industrial. They are called industrial banks or investment bank. As investment bank, they take part in the share capital of companies. Next one is cooperative bank. For the benefit of economically weaker sections, cooperative banking has been encouraged. Next one, agricultural development bank. To purchase new land, to purchase heavy agricultural machinery such as a tractor in repayment of old department. Next one, savings bank, saving bank. Though there is no separate bank, as savings bank, we have saving bank. In post office, the purpose of this kind of a bank is to encourage people to save more. Next one, foreign bank or exchange bank. Bank which are incorporate outside the country but doing banking businesses in India are called exchange bank. We provide foreign bank exchange subjected to the rule and regulations of country in which they are located. Next one, central bank. The leader of all the banks in a country is its central bank. It not only controls the bank but also protects by helping them whenever they are in difficulty. The more important topics are role of banks in economic development of a country. Bank loan extended to industrial. Next one, create investment. Next one, leads to production and then create employment opportunities, leads to income more demand for goods and services, increase in price, more profit, more dividend declarations, more demand for shares, explanations of capital market. The role of banks in economic development. The economic development of a country is indicated by the per capita of income of the people and the standard of living experienced by them. They depend upon the extent of economic growth, which will be indicated by the increase in productions of agricultural product, industrial product, and the service sector consisting of banking, insurance, transport, trade, etc. Role in primary sector. For increasing in the production in agricultural sector, the farmer should be provided with agricultural input such as seeds, fertilizer, pesticides. Bank for Agricultural and Rural Development has been set up as an apex bank to meet agricultural finance. Role in secondary sector. The investors are given loan for purchase of heavy machines on a long-term basis. For this purpose, there are development banks such as IDPI, ICICI, etc. For the purpose of improving foreign trade, especially export, we have Exim banks which finances for the promotions of exports as well as import. Next one, territory sector. The territorial sector, which consists of service sector, has trade, transport, warehousing, insurance, marketing, advertisement, etc., which more productions by various industries. Through bank finance, competitions intensifies, which leads to explanations, advertisement, and other marketing services. Next one, economic growth. So far, we have seen the role of banks in the primary and tertiary sector. In addition to this, banks play a vital role of economic by promoting both money market and capital market. The tigers in chain of activities, we can show this by way of diagram. Modern functions of commercial bank. Teller system, ATM system, home banking, green card, factoring, mutual fund, electronic clearing system, gold or platinum card, gold banking, e-banking. First one, teller system. Under this system, when a customer presents a check, a counter clerk will make payment immediately. As soon as a customer presents a check, the bank will be able to make payment immediately. This kind of system is called teller system. Next one, ATM, automatic teller system. Under this system, a customer can withdraw money by using his credit card. The customer who wants to avoid ATM facility will be given a code number which will be kept secret by the customer. The ATM facility is available in all metropolitan cities, and a customers can withdraw money in any ATM anywhere in the country. Home banking. Instead of going to the bank for withdrawal of money or for depositing of a check, a customer can do this banking business by sitting at home. In fact, even the negotiable instrument usage will be minimized. With the development of laptop computer, the customer can even operate this bank account even while traveling by your green card. In India, credit card facility is given to farmer by issue of green card to them. They can buy seeds, fertilizer and pesticides. Through the card, thus the bank is providing credit to the farmers by this green card. Next one, factoring. Commercial banks in India are undertaking factoring business. The bank will pay 80% of the value of the bill to the customer, and the balance of 20% will be paid after releasing the bill from the buyers. Next one, mutual fund. To enable the customers to avail the benefit of investment, banks in India have started mutual fund. This NPV may changes according to the fluctuations in the market value. It is the endeavor of every bank to maintain a higher NPV. Next, electronic clearing system. The telephone charge are being paid through this system. The banks are connected to the telephone department through a network by which the telephone charge of the customer are paid. Next, gold or platinum card. Generally, customers are given credit card facility through the bank according to the credit card worthiness. Next, a gold or platinum card holder can go to any part of the world for the purchase of valuable items through his card. Gold banking. It is a scheme introduced in 2000 to 2001 budget year of the Union Finance Minister and State Bank of India in the first bank in India to introduce gold deposit bank. Around 1,30,000 tons of gold are estimated to be available in India. Out of 13,000 tons, SBI has initially received 4.54 tons from 351 individuals. E-banking. E-banking refers to electronic banking, wherein the entire operations are done by the customer through his computer system by using code which maintains secrecy of transactions, functions of modern commercial bank, primary functions, acceptance of deposits, discounting of bills, granting of funds. So acceptance of deposit, savings bank, discounting of bills, loan, cash credit. So loan, current account, fixed deposit account. Next, overdraft, recurring deposit account. Secondary functions, agency services. The bank undertakes to collect checks, bills, and promotes for customer. General utility service. On permissions for RBI, the bank purchases or sells foreign exchange. Next on the agency services. The standing institutions of customers such as payment of telephone bills, insurance premium, etc. General utility services. On behalf of importers, the bank issue letter of credit to the exporter. Next, collecting dividend and the interest on various securities. The banker acts as joy in case of needed by accepting bills on behalf of customers. Banker also acts trustee of executor of bill for the customer. It accepts income tax on behalf of RBI. Difference between savings and current account. Savings account should always be in credit balance. No overdraft facility provided. Checkbook facility is left to the options. Restriction on number of withdrawals. Current account. It can be in credit or debit balance. Overdraft and cash credit facility provided. Checkbook is given by all. No restrictions in number of withdrawals. Thank you.